webinar. Good morning, everyone, and welcome to today's webinar on connecting African capital markets. My name is Guy Benan, and I'm the Research and Knowledge Manager with Making Finance Work for Africa. Today's webinar would not only highlight the progress of the African Exchanges Linkage Project, which is a joint initiative by the African Development Bank and the association, the African Securities Exchange Association. But also this session will discuss its importance in deepening African capital markets. In about 15 minutes, I'll be joined by Mr. Akin Adikun, who is a Senior Capital Markets Officer with the African Development Bank, who will also moderate the panel session. But before all that, allow me to go over the housekeeping items. 427 individuals registered today for this webinar, which will last 1 hour. All microphones will be mute, and you can ask questions during the session through the chat and the Q&A box at the bottom of your screen. As always, slides and a recording of the webinar will be available after we conclude on Making Finance Work for Africa web portal. In case you are experiencing any technical issue, please send us a quick feedback or a quick request, and we'll be happy to help. Finally, please remember to fill out a survey that will appear automatically after the session. This survey, as you know, is very important for us, as it helps us improve the delivery of our webinars and also to identify financial sector related topics to discuss. This ends our housekeeping. Very quickly, brief intro on Making Finance Work for Africa, which is a G8 initiative hosted at the African Development Bank. It's a multi-donor partnership with a focus on financial inclusion, long-term finance, and financial stability and regulation. Our members include, aside from the African Development Bank, GIZ, AFD, the French Development Agency, and the German Development Agency, African Bank, the European Investment Bank, the European Commission, and MINUSA, the Deutsche Foreign Ministry. You can access thousands of publication news articles on Making Finance online, Making Finance Work for Africa online library. This closes our brief presentation of Making Finance Work for Africa. We welcome today Dr. Edo Kosi Amenouve, President of the African Securities Exchanges Association, and Mr. Stéphane Nalitambi, the Director of Financial Sector Development Department at the African Development Bank. They will deliver the opening remarks in a couple of minutes. We are also pleased to welcome Mr. Wamkele Mene, Secretary General of the African Continental Free Trade Area. Mr. Wamkele Mene is with us today as a keynote speaker. We have a lot of material to cover, as you know, and will not take too much time. Before our panelists take the stage, allow me to invite Mr. Dr. Edo Kosi Amenouve for his opening remarks. Dr. Edo Kosi Amenouve is the President of the African Securities Exchanges Association, architect of the AELP. Mr. Dr. Amenouve.
Thank you, Mr. Menan. Mr. Secretary General, distinguished guests, ladies and gentlemen, I would like to thank you for participating in our today's webinar on the theme of connecting African capital markets. Connectivity remains at the core of the African Exchanges Linkage Project, and this is why we have decided today to share with you our views on the importance of African capital markets, as well as the AELP platform and its contribution to the intra-African trade, free investment, and capital flows across our continent. The aim of AELP is to facilitate cross-border trading of securities across 7 participating exchanges. Funded by the Korean African Economic Cooperation Trust Fund through the African Development Bank, AELP is the flagship project for the development of capital market on our continent. I believe that the African Continental Free Trade Area implementation and the AELP project have a common objective to improve Africa's self-capacity and are very complementary. While the AfCFTA agreement focuses on boosting the intra-African trade and strengthening the competitiveness of African companies, the AELP platform aims to stimulate intra-African flows and provide more opportunities for investors, regardless their location on the continent or abroad. I'm delighted to have today His Excellency Wamkele Mene, Secretary General of the AfCFTA. His contribution will undoubtedly enhance our understanding of the potential opportunities that AELP project will generate across the AfCFTA. This webinar represents a great opportunity for us to give you an update on the progress of the project in terms of achievement, as well as the next steps. We'll also share with you our expectations on how your involvement once we reach the implementation phase. We have already overcome a number of challenges beyond the aspect of COVID-19, and I would like to congratulate the exchange's participant members, the project team, the PMO, the assistant PMO, that have done a great job in this regard. Thank you for your attention. Thanks to the ASEA team, FDB, Making Finance Work for Africa, for the perfect organization of this webinar. I wish you all a great session with fruitful discussion. Thank you very much.
Thank you, Dr. Aminouve. Without further delay, I invite Mr. Stéphane Nalitambi, the Director of the Financial Sector Development at the African Development Bank, to deliver his welcome remarks. Mr. Nalitambi.
Thank you, and thank you, Guy. Allow me first of all to welcome our keynote speaker, His Excellency Monsieur Wamkele Mene, Secretary General of the AfCFTA Secretariat, and Dr. Félix Aminouve, President of the African Securities Exchanges Association and CEO of the Bourse Nationale de Valeurs Mobilières, who has just spoken. Distinguished speakers, ladies and gentlemen, we're honored to have you on this webinar. Our aim at the bank is to create stronger and connected capital markets that can intermediate domestic and global capital into the continent's real sector. We believe capital markets play an important role in the mobilization of resources from Africa's fast-growing pension, insurance, and asset management industries to fund the continent's infrastructure needs, especially in the AfDB's high-five priority areas, such as energy, agriculture, industrialization, and improving the quality of life for the people of Africa, and of course, integration. To this end, we're happy to partner with the ASEA on the mission to develop deep and resilient capital markets on the continent. The AELP is a flagship initiative in which we are supporting ASEA to create connectivity among securities exchanges and enhance regional integration of Africa's financial markets. The bank has also supported the establishment of the African Stockbrokers and Securities Dealers Association, the first Pan-African platform for security dealers to collaborate on capital markets integration and products innovation. Experience shows that countries where domestic capital markets are more developed have recorded stronger economic growth and expansion over the last 2 decades. We expect that when completed, the AELP will support African corporates in raising capital through issuances across multiple jurisdictions, leading to increased domestic, African, and foreign institutional investors' participation in our capital markets. The project will also encourage convergence towards international best practices and deeper integration of African financial markets into the global economy. While the project pilot phase involves 7 major African stock exchanges, which is quite good already, from 4 regions of the continent, it is our hope that subsequent phases will expand into other markets and thereby contribute to the objective of boosting intra-Africa investment flows and addressing major challenges of low market depth and liquidity that characterize most of our markets. The AELP is well aligned with the objectives of the AfCFTA to promote a liberalized market, aid the movement of capital and people, facilitate investments, and deepen the economic integration of the continent. The bank intervenes through innovative capital market product development to support the emergence of well-regulated, deep, and liquid capital markets with diverse product offerings. We're working with the private sector, governments, financial market regulators, security exchanges, and other capital market stakeholders to strengthen regulatory frameworks, broaden market participation, deepen product offering, and improve dissemination of capital markets data through transparent pricing mechanisms. The bank continues to leverage various instruments to support creation of a more effective enabling environment and increase access to long-term funding through domestic capital markets. We also provide specialized interventions, including the Capital Markets Development Trust Fund, which is dedicated to the development and support of African capital markets through the deployment of technical assistance and production of analytical work on Africa's capital markets. The success of the AELP will complement our broader programs aimed at facilitating African capital markets development and capacity, not only attract funding from domestic and international sources, but also to encourage retaining capital here on the continent. As your bank, we reiterate our commitment to the development of the continent's financial markets. Ladies and gentlemen, allow me on this note to wish you all fruitful deliberations on this very important subject matter for the continent. Thank you very much.
Thank you, Mr. Nalitambi. The AELP indeed has the potential to significantly increase not only investment and capital flow across African countries, but also intra-African trade. To talk more about that, here now is Mr. Wamkele Mene, Secretary General of the African Continental Free Trade. Mr. Wamkele Mene.
Well, thank you very much, and good afternoon to everybody. Let me start by saying thank you for inviting me to provide this keynote and to give you an update on the implementation of the African Continental Free Trade Area. I want to thank President Amenunve for the warm welcome to this event. I am in Togo, in Lomé, and today I had an engagement with the minister, and we were talking about connectivity in Africa and how to boost intra-Africa trade. And it strikes me that we can talk all we want about intra-Africa trade, but if we don't have productive sector investment, our ideals of boosting intra-Africa trade certainly will fall short in reality. Today, we have a continental free trade area, which has been signed by 54 out of 55 countries. And we have 36 countries that have ratified the agreement, making this FTA not only the second biggest in the world, but the most comprehensive free trade area that we have seen in recent times. And its scope is very wide: trade in goods, trade in services, e-commerce, intellectual property rights, competition, and investment protection. All of these pillars make up the agreement. And if we implement all of these pillars together in a very aggressive way, there is a great deal of potential for Africa to boost intra-Africa trade and to double intra-Africa trade by the year 2035. So today, as we all know, Africa's economy is characterized by the following: fragmentation of markets, smallness of national economies, lack of industrial capacity, and shallowness of course, productive capacity. And more importantly, we continue to sustain a colonial economic model in terms of which we export primary commodities decade after decade since the end of colonialism. The African Continental Free Trade Area seeks to change all of this, to transform Africa into a continent that produces value-added products, that has industrialized itself in 20 to 30 to 40 years' time, and certainly a continent that is globally and regionally competitive. It is possible. It is not a dream. We have seen other regions become more competitive, grow their economies. We have seen how free trade agreements that have a very, very strong development dimension, how they can contribute to economic growth in that particular region. And so what we have envisaged and what we are about to put into practice, I want to emphasize, is not unachievable in 20 to 30 years' time. To see Africa as an industrialized region is not something that is pie in the sky. We know that there will be challenges. We know that industrial development, industrialization is not a pill that you swallow today and tomorrow you've industrialized. It shall require decade after decade of disciplined industrial development action plan implementation. Now, we in the African Continental Free Trade Area, we want to make sure that this agreement leads to shared benefits, shared growth across the African continent and across the length and breadth of this continent. This shared growth can only come through the establishment of regional value chains, through which all of us should participate in. We are at different levels of economic development. We are at different levels of industrial capacity as a continent. However, we know once again from empirical evidence that even countries that may not have a productive capacity today, even countries that may not have an industrial capacity today, that they too, it is possible for them to be part of a regional value chain and to be part of industrialization and to graduate and to move up the value chain the more they become steeped in industrialization. For that to happen, we will need investment, and we will need investment to be directed to productive sector investment. We will need investment in areas that require, that are labor intensive, that will create jobs, and that will sustain our path of industrial development across the African continent. And so this is why it is so important that we together, the African Continental Free Trade Area Secretariat, as well as African Securities Exchanges Association, that we confront this challenge together. This challenge of directing capital, this challenge of directing investment to industrial development for Africa, because we know that the establishment of value chains will require intensive investment over a sustained period. We also know that in the year 2019, foreign direct investment into the African continent declined by between 9 to 10%, which means that we now have to relook at how as Africans we mobilize capital, how as Africans we mobilize resources, and we have to look deeper into African solutions to some of these declines in FDI. We have to mobilize our own resources. And that is a challenge that we will not be able to overcome as a secretariat alone. So I look forward to a partnership where we both will confront this challenge of mobilizing investment for productive sector capacity on the African continent. In that regard, we are working towards the establishment of a fund, of an AfCFTA investment fund, which I emphasize will be directed at productive sector, regional value chains, industrial development capacity on the African continent. And in due course, we will make an announcement about the modalities of that fund. And so we are not only recognizing the challenges that lie ahead, we're not only characterizing the challenges that lie ahead, we are also taking concrete steps in an effort to resolve some of these challenges that are related to lack of investment for the industrial sector in particular. I want to thank you very much for the opportunity to give this keynote address. I know that the challenges are going to be, at times will appear to be insurmountable, the challenges of regional integration, But we know from other parts of the world that regional integration is not something that happens overnight. We know that in order to get a depth of a financial services market, we know that regional integration is really at the core of achieving that depth of a financial services market. But we've taken the first step. We have drafted the law, which is the AfCFTA, the law that harmonizes the financial services sector and its regulations across the African continent. The AfCFTA establishes a single financial services market for the first time on the African continent. And I believe that this is something that we should all take advantage of and continue to leverage on a harmonized market for productive sector investment. Thank you very much, and I wish you very, very fruitful deliberations. Thank you.
Thank you, Mr. Wamkele-Mene. Indeed, deep and efficient domestic capital markets are important to improve productivity needed for a successful African continental free trade area. We really look forward to the launch of the AfCFTA fund and other initiatives as well. We'll not be able to ask questions to Mr. Wamkele-Mene, unfortunately. He'll have to leave us because of his busy schedule. Thank you again for having taken the time to be with us today, Mr. Wamkele-Mene.
Thank you very much.
Moving now to the session, Tom Mini is the project manager of the African Exchanges Linkage Project. He's going to highlight the project progress to date and also some of the milestones. Tom, you have the floor.
Thank you very much, Mr. Guy Menan, and it's quite difficult to be following such an excellent speaker and very much a big honor to be following His Excellency Wamkele-Mene. I think all of us are very proud to be playing a part in helping to build this dream of a Pan-African vision of building Africa's capital markets to support Africa's development. And thank you very much to our opening speakers as well, and to Making Finance Work for Africa and African Development Bank for bringing us to this point. It's been a lot of support has come through, and very strong and consistent support. So I'm going to talk a bit about the project. Maybe next slide, please. I'm going to do an overview of the project. I'm going to look at roughly what we've achieved so far, drill down a bit more into one of the key components, which is the technology platform, and then look at the current status and the desired outcomes. Next. So we can go on next. Yeah, the main aim of the linkage project is a flagship project of the African Securities Exchanges Association and the African Development Bank. It's aiming at creating cross-border trading of securities, as you've heard from our president and chairperson. So I think most of these have been covered already. Next slide, please. And just to quickly highlight the African Securities Exchanges Association, we're part of that. It's the premier association of 26 African exchanges. The mission is to engage the African capital market ecosystems to foster capital mobilization, promote sustainability, and enhance financial inclusion for the benefit of Africa's economic development. I think that's what we're always about when we're running stock exchanges. We're trying to make sure that we're building efficient vehicles to support development so that people can use stock exchanges in order to be able to push investment into the most productive sectors. As mentioned, we're 7 exchanges covering 14 countries, and we're in 4 regions representing more than 95% of the market capitalization. Our project office is hosted very wonderfully by the Nairobi Securities Exchange as part of the ASEA Secretariat. Next. Over on the right of the slide, I'd really like to highlight some of the amazing opportunities of African companies that will be available to investors through the AELP Link platform. You know, Africa should be very proud. It's got a lot of well-managed companies with excellent long-term growth prospects. Some of them even world-beating companies that have got dual listings and so on in Europe and are really head and shoulders above many of their competition across the world. And in terms of the growth prospects of Africa, we've got amazing stories here. Just to stress that we're trying to make sure the platform will address everything that's listed on the African exchanges. So the equities, fixed income, funds, derivatives, exchange traded funds. Already, if you're looking just at the equities, we've got more than 1,000 listed companies across our 7 exchanges, and up to between $1 trillion and $1.25 trillion, depending on market share prices in market capitalization. Next. And yeah, as we've heard, we're very much built on the same foundation and the same ideals as the African Union vision, as the vision of the African Economic Community, which is articulated in the Abuja Treaty in 1991, for a free flow of capital and investment across Africa, for Africa to be able to support its own development and to be able to channel investment across the border into the other African markets, so that Africans are available to have these long-term growth opportunities, to be able to invest in places they know because they're neighboring countries. So rather than always having to go up to Europe for capital, we're very much, in terms of our vision, we're aligned very much with the African Union's vision 2063. We can identify where we fit in terms of the goals of African Union. And our role is really to build a Pan-African network of regional and national securities markets. And we're trying to make sure we can be able to show measurable progress, concrete progress, to progress towards free movement of capital and building Africa's stock exchanges. And ASEA and the African Union already held one joint webinar last year, August. We're very much keen to give whatever support we can to some of the exciting steps that His Excellency Wamkele Mene has mentioned, particularly relating to trade in financial services. Next, please. We've covered this already, but we have a thank you very much to Korea, South Korea Africa Economic Cooperation Trust Fund, and for African Development Bank. Most of the funding is going on to the information technology infrastructure for stock exchanges, order routing system. There's some funding for capacity building. There's some funding for the project management office. Next, please. So what have we achieved so far in the project? It launched in 2016. It's taken a while to pick up momentum until the funding was achieved, and then it started moving quite fast. But even before that, the African Development Bank and ASEA had worked out criteria to select some exchanges for phase 1. The aim was to try and pick exchanges right across the continent in all of the north, south, east, west regions. So that was all achieved. The project management office was set up. Communication and information dissemination. They've held sensitization workshops in 7 markets. And that's been carried out already. And then they've also done investor appetite survey. 50 asset managers participated, and we publicized that a bit last year, July. Next, they showed very much enthusiasm for the markets. Our structures, so in terms of when you want to find out more about AELP, you will be able to contact your local exchange from those 7 participating exchanges. Our structure, our governance is led by the CEOs of the exchanges and the African Development Bank managers as a steering committee. And then we're very strong. We have participation from senior managers of the exchanges and the CSDs in our working committees, the technical committee, the commercial committee, and the legal committee. And then we're driving the procurement of the technologies platform through the AELP procurement task force, which is again senior managers and experts. And it's great that they're putting so much time into making sure there's something that they can live with into the future, and they know is going to be sustainable for their markets. Next. So let's drive straight into the platform. Essentially, what we're looking at is trying to procure a solution that will create a broker-to-broker network, hopefully with live prices. And we're looking at, as we've mentioned, being able to handle different order types and asset classes, and the brokers should be able to access it using their existing infrastructure, or if they don't have, then they should still be able to access it. Let's move on. Next. So this was just an early slide. The screens will be very different eventually, but just give an idea to, can we bring all the markets into one place, accessible in one place. Next, please. And just to remind you of the framework of the AELP, so we're not talking about dual listings and so on. We're aiming that the securities remain listed on the host exchange. We're very much about liquidity, so bringing investors into the host exchanges. Securities continue to comply with existing listing requirements, rules and regulations. We're trying to look at this asset class of African listed securities, and it should be all the listed securities across the markets. The order routing system will send orders from one broker to another. The sponsoring broker on the host exchange puts the order in and is responsible for compliance there. We're looking for live data, and the sponsoring broker will clear and settle the trade in the host market using local currency and is responsible for complying with the host market rules. Payment is outside our system, it carries on as before. Stocks remain in their host market CSD, and the custodians and sub-custodians are very much key in this whole process. Next, please. And next. So we're just in the process, we've done design, we're working through the procurement of the technology solution, and once we finish the procurement, we'll be implementing, we're hoping for that. We've just launched our website, and we're just working on the systems to share research. Next, please. So what is our desired outcome? It's more liquidity and market depth in the exchanges. If the stockbrokers, the asset managers and custodians are happy, and particularly their clients are happy, then we're happy. We want a user-friendly solution that makes it easy for traders. Key ongoing costs is one of our key considerations. And our mandate from the exchange CEOs is really support everything that creates liquidity. So we don't have to only focus on our solution. We give support to all the people that are creating cross-border flows. A question coming up, could we support capital raising and IPOs across Africa in future? I've mentioned the research hub. And then to be clear that this is really phase one, it's a pilot with 7 exchanges, and then we will widen it out to more exchanges in the ASEA framework. Can we go on next, please? This is the final slide, and just to say that our success is measured by the quantity of cross-border orders and investment flows. I'm very, very open to questions. In order for timing, we'll put that as part of the next panel. I'll be there at the end of that for your questions and answers, but please send them in on the chat services. Please have a look at our website, which is still growing, but it's up and running. And let me then hand over without more ado onto our panelists. I think we're getting ready to hand over. So we have a panel consisting of Mr. Akin Adigun, CFA. He is the Senior Investment Officer, Senior Capital Markets Officer at the African Development Bank. And I'll let Akin then come on and take over, and he'll be able to introduce his panelists.
Thank you, Tom, for that excellent presentation. So, audience, good afternoon, everyone. You're welcome to this panel session. The title of the panel is Cross-Border Investment Flows Within Africa and the Role of the African Exchanges Linkage Project. As Tom has said, he will remain on this panel. We'll also be joined by 2 other panelists. First of all, we have Gerald Gondo. Gerald is the Business Development Executive at Wiskura Africa. Gerald used to be the founding partner of AfCFTA, and then he had experience also working with Imara Asset Management. So welcome, Gerald, to the panel. We also have Mr. Willie Njoroge. Willie is the CEO of the Kenya Association of Stockbrokers and Investment Banks, KASI. Willie also belongs to the founding membership of the African Stockbrokers and Securities Dealers Association. Willie is actually the acting general secretary of this association, which is newly formed to coordinate, collaborate on integrating capital markets. So welcome to the panel, Willie, Gerald, and Tom. I hope you can hear me.
Certainly.
Yeah, yes, Akin. Thank you very much. I can hear you.
Okay, very well. So let's just build on the presentation given by Tom. I'll start with you, Gerald. So the success of the African Exchanges Linkage Project is to a large extent based on the adaptability by domestic institutional investors within the target markets, starting with those 7 exchanges. What do you think is the potential for African pension funds and other institutional investors to participate participate in cross-border investments when you look at existing investor appetite and even regulatory provisions around cross-border investments?
Thanks, Akin. I think in terms of particularly institutional investor participation, and from our vantage point, where as Riskera we assist African institutional investors and pension funds really in thinking through the investment governance program. Across all countries in which we operate, the large institutional investors are increasingly looking to Africa as an investment avenue and as a lucrative investment avenue, and you can start seeing the transitioning of investment mandates to reflect that. But I think before jumping into the securities, which really is the subject matter of this webinar, it's important to also appreciate that by and large, institutional investors, pension funds are regulated animals. And their movement is largely guided by the nature of the regulation within each of their jurisdictions. And you're also starting to see harmonization and thinking by regulators in terms of how to enable their capital markets to interact with each other. So I'm sure if you were to look maybe 10 or 15 years ago at the regulations, be it in Kenya or Nigeria, they look very different to what they look like now. You're starting to see greater granularization in terms of asset class limits or asset class allocations that are provided by the regulators, which then feeds into the pension funds and the investment managers changing their mandates to then meet those asset class criterions. And similarly so too, that you're also starting to see greater emphasis in the regulations and in the guidance, not only in terms of investing in Africa, but also introducing sustainable investment practices as part of the entire investment governance framework, but more importantly, sustainable investment practices when looking at the African continent, which really speaks to the aspirations, as mentioned by previous speakers, of trying to harness and unlock capital into other African capital markets in a sustainable manner. Where are we in terms of this process? It's really nascent stages. As Tom has alluded to, this platform or this initiative is only part of a number of initiatives that are increasingly encouraging regulatory harmonization to unlock capital on the continent. I'll pause that there, Ken.
Thanks, Gerald. What I take from your response is that in terms of investor appetite, you think that is very much there. Regulations have improved over the last 10 to 15 years, especially allowing asset managers or pension funds to start looking at investments beyond their main jurisdiction. Thank you. I'll move on to Willie. Willie, as a market practitioner in the capital markets, I would like to ask you, what are the main hurdles to cross-border trading at present? And how do you see the AELP project resolving some of these factors hindering cross-border investments?
All right. Thank you again. I hope I got your question right. Sorry, my connectivity was giving me a bit of a problem. So what are the main hurdles to cross-border trading at present? The truth of the matter, Akin, and the candid position is that there are a great deal of hurdles and challenges that inhibit and discourage cross-border trading. These challenges, I must say, are not insurmountable, but shall certainly require concerted efforts to overcome them. I can summarize them in different categories. We have ideological hurdles, ideological differences. We all agree that we need to have cross-border trading, but we haven't quite reached a consensus on exactly how to go about it. And that's one of the wonderful things that the AELP project has come to create a path and sort of lead the way on how this can be done. We have legislative and regulatory. We have differences in the laws that govern our different countries. And of course, the regulatory regimes are also quite different. How shall we deal, for instance, with the instances where there is conflict in different jurisdictions, and how shall we go about it? We have laws that are in place in certain countries that inhibit free flow of money. We have other jurisdictions that have got laws regarding currency repatriation. How are we going to deal with that? And we're trying to open up our market. Then we have technical challenges. This is now talking about how we get the infrastructure in place that shall guarantee successful trades. And we are happy that the AELP project is making some very good strides in that direction. There is administrative. Currently, the brokers that are engaging in cross-border trade can testify that the administrative burden is cumbersome, and it makes it very discouraging to engage in cross-border trade. Finally, we also have behavioral, I would like to put it that way, where brokers are looking at one another and asking themselves, shall the corresponding brokers perform as expected? Do we need to call in the regulators to have oversight over everything that is being conducted in the market? Do we have a robust complaints reporting mechanism? Are there adequate dispute resolution structures in place? So those are the kind of hurdles and challenges that I foresee. And to your second leg of the question, where you ask, how do we see the AELP project resolving some of these issues that I have raised? Technical challenges, for instance, the AELP project is making good progress in getting the infrastructure in place. I think Thomas just told us about it. The project, the AELP project, has also put together committees, which also Tom talked about, the legal committee and what have you, that are putting some of these things in place. For example, they recently shared the broker agreement that shall be signed between sponsoring broker and the sponsored broker. And these are some of the areas that will be potential challenges in the future that are being addressed by the AELP. Thank you again.
Yeah, thanks, Mr. Willie. I think those are very good factors you've raised. You mentioned difference in regulatory regimes, currency, technical administrative challenges, and issues of trust. And just looking at Tom's presentation earlier, I think the AELP is looking to address some of these issues, and then we'll be able to get that as it goes ahead. Just to mention to the audience that you can post your questions in the chat box. We will collate that and try to get the panelists to answer that within the space of time that we have. Tom, let me come to you, just looking at your presentation. I think the recent event since the AELP was instituted as a project is the COVID-19 pandemic, right? So I would like to ask you, how do you think the effect of COVID-19 pandemic on stock exchanges, capital flows, His Excellency Wamkele Mene mentioned earlier that FDI into Africa's decline, I think, over the last 2 years. So you're beginning to see all of that impact on emerging markets due to the COVID-19 pandemic. How do you see the AELP solving some of these capital outflow problems for individual stock exchanges, especially those that are involved in the AELP?
So thank you very much, Akin. I think it's stock exchanges, and I used to run a stock exchange in Namibia, never think of themselves as solving the problems. We really create the marketplaces for other people to come and solve the problems. Our job is to really make sure that things run well. And I think that's been one of the big achievements of this pandemic and the terrible situation, is how well the African exchanges have risen to the challenge. You know, all of the exchanges that I'm aware of, and particularly the ones I'm close to through the AELP, moved very rapidly. I think they never missed a trading session. They never missed any, and also the whole capital market infrastructure in terms of the back office, the custody and settlement, the clearing and settlement, the custodians, you know, they rose to the challenge very well, and they accelerated their digitization. They moved to working from home. They moved to much more digital solutions. And it's a very exciting story of how well the stock exchanges management and staff responded. Their technology teams really stepped up. Same with the clearing and settlement, same with the custodians and the banks and asset managers. You know, so the market was able to push forward. And it's not a question of whether prices go up or down. That's not the measure of success. The measure of success for exchanges is whether we keep the pipes flowing, and we've done that. And AELP is an extension on the same prospect, to keep building on that move to digitization, move to streamlining, and build more pipes up and down the continent. Now, people have asked a bit about, you know, to what extent it's already able to happen, how we can fit around some of the regulations and blockages. And what is most exciting is, apart from the technology platform, is the platform of exchanges working together. 7 exchanges across the continent working together. Willie's mentioned that they're working on looking at legal obstacles and just seeing where they can have templates to fit in and complement what, for instance, brokers are already trading with each other. I think we've been trying to chart the amount of trading that's moving across the continent. Every quarter we do a survey with the exchanges and some of the central depositories and regulators to try and understand that. And you know, there's probably $1.3 billion worth of trading a year moving up and down across the continental exchanges from one market to another. So investors in one market buying and selling on one of the other AELP markets. So there's a lot going on. There's a lot of networks already there. And we're a platform of 7 exchanges looking for partners, looking to work with the regulators, looking to work with the banks, and very much under the sort of leadership of AfCFTA and AU initiatives. So trying to sort of be able to deliver concrete steps towards achieving that. So that's where we're sort of basically trying to fit in, trying to open pipes, trying to make things work, and trying to be a platform for tackling some of the many issues that we know are there to do with cross-border trading.
Thanks, Tom. Very comprehensive. I think your answer is also applicable to some of the questions I see coming in on the chat, and that's okay. I'll go back to Gerald. Gerald, I know your organization, you do a lot of research on data collection, and the question to you here is about cross-border capital raising, whether it's through IPOs or bond issuances or any other means, alternative investments. So what do you think are the main impediments to cross-border capital raise at this moment, based on maybe your recent research, or there's your Bright Africa reports? What are the main impediments? And do you think, with what you've heard about the African Exchanges Linkage Project, you think some of these impediments could be taken care of?
Yeah, thanks for that question. I suppose I need to be careful in answering this, in that, you know, it's actually counterintuitive in that, in the research that we've conducted across many African markets, the main inhibitor in terms of at least the reallocation of institutional capital from largely fixed income investments, in some countries it goes as high as 70% pension fund exposure to fixed income investments, is really the high yield that you get from government bonds in many of these African countries. And resultantly, you see a lot of pension fund and insurance funds allocated to government bonds. And so as a result of that, you have a crowding out effect where less capital is flowing to what we deem to be the more productive side of the economy, funding IPOs, funding small businesses who need capital to grow, who need capital to employ more people, who need capital to expand across African markets. So in a lot of countries, it's just that, the high yield that you're getting from government bonds, which negates the need to look at any other asset class. In the second instance, it's really the view taken by most SMEs, and you know, the AELP and the African Stock Exchange Association are alert to this fact, in that it is perceived, it is a lot harder and more expensive to raise capital on exchange markets or on a stock exchange in Africa. it's nearly as if our entrepreneurs have been conditioned to say, once you've raised capital from friends and family, the next port of call you're going to look at is the bank, and you never move beyond that. And to actually convince the growth of the growing SMEs on the continent to look at equity capital markets and debt capital markets alongside commercial bank facilities is really a call to action for all of us within the financial services to change that perception. And then lastly, the depth of these markets. If you're looking at your indices and looking at Standard & Poor's or MSCI, the way they're structured, you really have kind of four main African capital markets within these indices: your Egypt, your Morocco's, your Kenya, and Nigeria. And even the liquidity in these bellwether markets, if you compare, what the liquidity was just before the global financial crisis to what it is now, these markets have never recovered in terms of the quantum of liquidity that is being traded, which again is linked to the fact that domestic capital is channeling a lot of savings to government bonds and not to equity capital markets, vis-a-vis foreign investors who are looking at Africa are always looking at the risk on versus risk off dichotomy. And when it's risk off, liquidity sucked out of the African capital markets. So, sorry to not have a simple answer to it, but it's multi, there are multiple channels to consider in terms of looking to crowd in capital in our African market.
Thank you, Gerald, very well. I think you covered quite a lot. You mentioned the depth and liquidity of these markets themselves, how expensive it is to raise capital, especially for SMEs, which are prevalent in most of these countries. And then you also mentioned high local interest rates itself. I'll just turn to some of the questions we're getting. We'll be getting a lot of questions, and I'll just tell the audience that if we are not able to answer your question at this webinar, we'll collate the question and then distribute among the panelists and try to get the answers to you. So this comment or question, really, I'll send it to Tom. I'll ask Tom to take this. So this question is from Amer Raza Khan, and it's about these previous surveys that were done before the AELP was instituted. So Tom, before the project started, was it known what level of demand or actual amounts there was for cross-border trading? That's question A. B, what growth is forecast in the first 3 years of implementation of the AELP? Tom.
Yeah, so I think that would be assuming that there isn't cross-border trading already. There's a lot of cross-border trading happening, and we've been interested to try and track that. So people, brokers, you can talk to your broker can phone another broker and do the trading. There's quite a lot of order routing networks that are operating already across the market. You have the Bloombergs, you have lots and lots of other networks. Refinitiv have networks. Other people are providing networks that are very active across the market. So there is a lot of cross-border order routing. Quite a lot of international investors will go to a broker in a key market, say Johannesburg or Nigeria, and then use them as their bridgehead to go into the other African markets. And certainly it's beginning that the African pension funds and institutions are starting to have African allocations. We've seen very strong interest from some of the leading countries in terms of building that up. So it does exist already. I think we've measured 1.3 billion a year in existing trading going on. And we're trying to create an extra solution that will fit in there, will add value in terms of costs, will add value in terms of who it's available for, that the technology is adapted for all of those 7 participating exchanges. We're just trying to create more pipes that will do it. So we don't see that we're going to transform that landscape. It's something that's happening. It's a dynamic landscape. We're hoping to add value and help it move forward. And at the same time, as mentioned, our focus is liquidity. So our platform of 7 exchanges, the legal committee, the commercial committee, they're really looking at what are the sort of other challenges apart from technology that can be assisting to increase the order flow, so to support the other trading platforms. So we don't have a clear percentage increase. It may be that it'll just keep growing, but we don't have a clear idea. We're just trying to measure what's happening every quarter, see if it's increasing. That's very much our aim, and measure to see how much we can contribute to that increase.
Yeah, thanks, Tom. I hope that answers your question, Ahmed. I think also the survey or collection of data is an ongoing process, and then through the AELP platform, especially when the technology is up, there should be much more concrete data available. I'll also just turn again to the questions from the audience. We're getting some more questions in. There's a question here from Sabiso Seychelles, and it's saying, I might have missed this. Will all countries be participating? Will all countries that are participating in the AfCFTA be automatically participating in the AELP as well? So I'm going to take that quickly, just a minute.
Yeah, so basically we're starting with a platform of 7 exchanges as a pilot. So those are the ones we're building, we're working around, because it's 7 different sets of regulations, 7 different sets of market practice, 7 different sets of brokers and institutions. Once we've got pilot phase run, then we're very much open to other countries that have regulated national stock exchanges to join. The criteria is there. So we'd see this as very much expanding. If we can prove the concept on the pilot phase 1, then it's open for more and more to come on board.
Yeah, thanks, Tom. Willie, let me come back to you. And this is more a focus on the association, which you are also representing, the African Stockbrokers and Securities Dealers Association. I know it's quite new. Just asking you, what are the objectives of this association, especially as it relates to capital markets integration, cross-border investments? Who are the members? And then what are your plans or next steps?
Okay, thank you very much, Akin. Now I'll start off with first explaining who the members of the association is. This is the African Stockbrokers and Securities Dealers Association. It is basically an association of national associations of stockbrokers and securities dealers. Currently, we are in 6 countries. We're in Egypt, Kenya, Mauritius, Morocco, Nigeria, and the WAEMU countries. These are 6 of the 7 jurisdictions in which the AELP is participating. We expect or hope that South Africa might join in later as an observer member. However, it's also important for me to add that we have got the African Development Bank as an observer member of ASDA. We also have the African Securities Exchanges Association also as an observer member. So currently that is how the association is constituted. The members have, of course, by now embarked on an African-wide recruitment exercise. So we want this association to not be restricted to the countries in the AELP project, but any country in Africa that has got a stock exchange. We want it to be all-inclusive. And we're making good progress in putting our constitutive documents in order, the constitution and what have you. And we're also in the process of registering it in Nairobi, Kenya. So with regard, sorry?
Go ahead, please.
Yes, with regard to our objectives, looking at integration, we're looking at, there are numerous benefits, and I think this might have been mentioned before. There'll be increased investment, there'll be more business for our members. We feel that our separate markets in isolation may not be deep or large enough. Once together with an integrated market, we shall provide a wider diversity and a wealth of choice of investable products for our clients. We shall accelerate economic growth, mobilize savings, and I think these are some things that have also been said by previous speakers. So we're very much aligned generally with the other players in the project. Thank you.
Thanks, Willie. We might not have so much time left to take more questions, but we're noting all these questions. And I note, excuse me, I noticed some of the questions have to do with guaranteeing trades on the AELP platform. I think what we'll do is we'll collate them and send them to Tom. So we'll try to provide answers to that and share back with you. Before we go, I'll just go through the panel again, just 1 minute each. And the question is the same for all of you. In the next 12 months, what would you like to see as success with the AELP project or capital markets integration generally? Who'll start first?
I'll give it a go. Would really like to see through the auspices of the African Securities Exchanges Association, really an initiative that brings across more broker research and more capital market research for these smaller markets that aren't covered as much. That would be very helpful, I think, in the broader development initiative.
So that's involving other markets, smaller markets on the concept. Thank you. Tom?
Yeah, I think our ambition for 12 months is to obviously to see some trading going through our system, to have that working, but particularly then to build the connections of the brokers and the other market participants. You know, as I mentioned, if they're happy, the thing is going to work, and if their clients are happy. So it's to start seeing that we're providing value for them and that they're able to deliver. With regard to one of the questions that's interesting is about costs and how it's going to be affected. And we're not really dictating costs or how the commercial agreements should work. There's already practice going on around the continent. We're just trying to regularize it, streamline, and we're very clear to the brokers that if you do cost yourselves out of business, it's not going to work. So you have to try and remain competitive. So we're trying to build a competitive solution. Our vision is to start seeing trades going through and see what are the targets that our platform of 7 exchanges collaborating and working with the African Continental Free Trade Area, working with the regulators, working with everybody else, how we can start to boost those processes.
Thank you, Tom. Willie, same question for you.
Yes, thank you again. Very simply put, in the next 12 months, what we would like to see as stockbrokers in Africa is more trade, which of course translates to more income for the members. We want to see more trading in terms of quantity, quality, velocity. We want to have a very vibrant market across Africa and rejuvenated cross-border trade. And perhaps also more issuances and the use of the platform for capital raising. We want to see more activity. In a nutshell, we would like to see more activity.
Thank you. So that's summarily liquidity debt in this market. So thank you to each one of you, Gerald, Willie, Tom, for being members of the panel. I think as a wrap up, just before I hand over to Guy Menan, we've had an interesting session today. We're trying to make sure it doesn't go beyond the 1 hour mark substantially. That's why we're wrapping up now. We are aware of all the other questions. We'll collect those, as I've said, and then try to get them answered and shared with you. So we started with introductory remarks from Dr. Amenove and Mr. Stephen Oletambi of the African Securities Exchanges Association and African Development Bank, respectively. And our key speaker was Mr. Wamkele Mene, who is the Secretary General of the African Continental Free Trade Area in Accra. He spoke about the progress with the AfCFTA and how much the objectives are aligned with the AELP. And then we just concluded a panel session with Gerald Gondo, William Joroge, and Tom Mene, the project manager of the AELP, on just cross-border investments, how the practice is currently, and how the AELP can hope to correct some of the challenges. So on this note, I'll thank you once again for being part of this audience, for being panelists, speakers, and I'll hand over to Mr. Guy Menan to close the session. Thank you.
Thank you, Mr. Adigun. On behalf of Making Finance Work for Africa and the African Securities Exchanges Association, I would like to thank our speakers, our panelists, and all the participants for attending today's webinar. Next week, Making Finance Work for Africa will host a webinar next week on March 4th on gender finance in Africa. This webinar is part of the series with the European Investment Bank on the SME Banking and Microfinance Academy. If you have any other questions, just feel free to send a message to Making Finance Work for Africa Once the webinar ends, we'll see a survey. You'll see a survey on your browser, and we'll appreciate if you could complete the survey and provide feedback. You'll also receive a follow-up email within 24 to 48 hours with a link to view the recording and also with the materials, the presentations, and the slides. On behalf, again, of Making Finance Work for Africa, we're Making Finance Work for Africa and the ASEA. Thank you, and stay safe. Bye-bye, everyone.
Thank you.
Okay, bye-bye. Thank you.
Bye.